The day, but still a very shaky day for investors to be sure. Here to help make sense of it, Andrew Keene, independent trader at the CBOE, Andre Julian, chief investment strategist at OpVest, and Peter Costa, CEO of Empire Executions. All right, Peter, let's start off with you.
Okay.
What is your view? Did Bernanke spook the market, and did the IEA/DOE oil dump this morning spook it more?
Yes, absolutely, and I think that the oil dump, as you call it, is probably a bigger issue than it's being made out to be a bigger issue than it actually is. To me, having oil come back down to around the $90 level, it should be a very, very good sign for the future. And I do think this is a more livable oil price at this level. So I don't think that spooked the market. I think we're still worried about Greece. I think Bernanke's comments yesterday, and I mean, it's a combination of a lot of different things. The oil issue, I think, is actually a good thing, and I think this is something that, we'll benefit from this at some point coming up in the future. I do think this is going to help the markets at some point. But I still think we have some room downside.
Okay, Andrew, lower prices at the pump are probably a good thing. So why isn't the stock market rallying then today?
Yeah, I mean, I totally agree with Peter. I think long-term lower oil is better for us. We saw corn got slammed yesterday as limit down. We saw wheat down. Commodities coming down is good for us. But the IEA coming out with this and releasing 2 million barrels of oil a day is basically saying there's a slowdown in the world. This is how they're coping with the slowdown. We saw a slowdown in China and in Europe's PMI. But long term, I think this is good, and I think earnings will take us out of this downward slump that we're in. We have tested the 200-day moving average a bunch of times, and we've bounced off that.
Andrew, why are you so convinced that earnings are going to take us out of this slump? I mean, don't you feel that maybe, considering what's going on with the macroeconomy, earnings estimates are going to have to be ratcheted down? Well,
if you look at it, last quarter, 80% of all the S&P stocks beat on earnings, so that was really good. We see technology absolutely getting slammed. You see Apple at its high at 363, now it's trading around 315. So these are all getting slammed, which I think is going to set up a better than anticipated earnings because people aren't expecting that much.
What about you, Andre? Where do we make money in this market?
Well, I think right now people are rotating in the consumer staples, which is a smart place to go. I mean, typically when you're concerned about a downturn in the economy, as obviously the Fed is, and as obviously the government is, and the IEA is, then you start looking into these staples. So, I mean, alcohol and cigarettes, that's typically been the moniker. So look at a company like Diageo. I really like Diageo. They basically are one of the world's largest purveyors of premium alcohol, and they've done a good job over the past probably 14, 15 years, divesting off of some of their ancillary businesses and focusing on, their name brands like Guinness, like Johnny Walker. And so, when you look at that, typically during these times, those kind of companies do very well. I think that's a solid company with good brand name recognitions and definitely a great balance sheet moving forward.
All right, Andre, Andrew, and Peter, gentlemen all, thank you so much.
Thanks, Brian.
Thank you.
Thanks, Mandy.